The rise in the US dollar oil returned to the levels posted earlier this month. That is, the quote came back to the levels at which it was before political turmoil caused by the US midterm elections. This is partly due to their preliminary results. According to them, Democrats held power in the Senate, while Republicans won control of the House of Representatives. Given the slight advantage of the Republican Party, there should be no obstacles to further sales of oil from strategic reserves. In other words, oil supply will remain unchanged. Nevertheless, the asset has suffered heavy losses, which indicates possible oversold conditions, so its further decline is expected to be limited. Most likely, oil will soon head towards $96 per barrel. However, bullish sentiment is tempered by the news about an increase in the US crude oil inventories, which indicates a lower oil demand. Besides, oil prices are weighed down by reports of China's ongoing COVID-19 containment strategy. Notably, this country is considered the world's largest importer of crude oil, and new coronavirus cases with a zero-tolerance policy may lead to resumed restrictive measures, thus weakening the prospect of the recovery in energy demand. From a technical point of view, Brent crude oil futures have lost over 7% since the beginning of the trading week. This is a pretty strong price change. According to short-term and intraday time frames, the asset has fallen into oversold territory. That's why an upward pullback cannot be ruled out. The decline is likely to be limited by the support levels of $92 and $90. Gold is moving in a cautious trading tone with no signs of a pullback. However, the yellow metal has gained strong upside momentum amid the US midterm elections, which also suggests that the asset is clearly overbought. In the meantime, the quote is trading in a relatively tight range between the levels of 1,700 and 1,715. As soon as the final results of the elections become known, the market will most likely enter correction, falling below $1,700 per ounce. Moreover, gold prices may well dip to $1,600. After all, further monetary policy tightening by major central banks remains a constraint of the asset's growth. Speculative activity is likely to increase when the quote gets out of the current range. A possible election victory for the Republican Party could lead to a delay in the adoption of various measures, including those targeting Russia. These expectations served as preconditions for a stronger ruble. However, it looks like Republicans will only gain control of the House of Representatives, while Democrats will hold on to the Senate. Thus, the White House will probably keep tightening sanctions. Against this background, the dollar rose above 61 rubles. Nevertheless, by and large, the Russian currency remains stable, trading around 61 rubles per dollar. In other words, the situation has barely changed, except that volatility increased. Given the experience of previous months, the market will need some time to come down, perhaps a week or two. Volatility will ease and the Russian currency will see gradual weakening. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.